Welcome, everyone. We're back again with Alejandro, who is going to discuss CAVA restaurants with me. And as many of you might know, CAVA is a kind of fast casual Mediterranean cuisine. And I think, wait, let me start that over because I was like kind of saying a little bit. All right, redo. Welcome, everyone. I'm back again with Alejandro, who is kind to have studied CAVA restaurants along with me. I also looked into CAVA a little bit more because this restaurant business just IPO'd on June 15, 2023. So it's a really new hot stock. And I think it's very interesting to study this restaurant because I first discovered it in 2016 on a trip down to Washington, D.C. And I was very impressed with their fast casual food model. It kind of reminds me of Chipotle style in walk the line food service. So with that, Alejandro is going to walk us through some of the financial performance so far, and then we'll discuss more and make some comparisons with Chipotle. So with that, Alejandro, please feel free to go ahead.
Hello, guys. Hello, Michelle. Thanks again for having me. As you say, it's very exciting to talk about CAVA because it's a new thing for the market. So not many new IPOs this year. So everybody is very excited with this IPO. So let's get started. So what is CAVA? Is the Mediterranean fast casual restaurant brand bringing together health and great flavors at scale and a good price point. It is the only national player at scale in the Mediterranean category, which obviously brings them first mover advantage, and they are going to try to keep growing it and just be like the king in the field. It has around 265 stores at the moment. They've been growing, and we're going to see that a little later, their pace. They've been growing same restaurant sales double digits since 2016. And this is really important because we can just open restaurants, and obviously our sales are going to grow, but we need to compare if the restaurants that we had open last year is growing, because if it's not growing, I mean, yeah, we are building sales, but we are not building profit, and that scale is not helping us at all. So this is really good thing that CAVA is doing, and they're gonna hopefully keep doing it. So what the CAVA experience? So everybody likes to eat tasty food, but we all know that tasty food is usually not that tasteful, not that good for you, I'm sorry. And other people want to go healthy, but the problem with this is that many times when we eat healthy, we don't enjoy eating our food. CAVA is trying to bring this together, so having healthy food a really good taste, which I think is a great formula to win and to keep getting customers in their doors. So this is a good way to go. Important facts about CAVA. The Mediterranean category is a $40 billion industry and growing. This is in the United States. At the moment, they are around 500 million. So basically they're the leader with just a little above 1% of the market. So there is a lot of market to grow. There is an increase on the health focus and wellness in the world. So they are going towards the world is going. I mean, with time, people are more worried about going to the gym, walking, being mentally healthy. And CAVA is a concept that brings this together. So the world is going to war with them. The Mediterranean diet has been ranked #1 best diet overall in many publications. So obviously, there's many publications that say different stuff, but Mediterranean diet is very famous for health. So again, as I said before, they're going towards the puck is going. Almost 4 million loyalty members. This is great. It's become a standard for every restaurant to just get the loyalty members. They consume more, they have more your brand in the mind. They give you a lot of data, so that way you implement new stuff. So let's say they can see if the CAVA customers are going to a restaurant, how many times a week, and with that, they can get information to keep growing in the most profitable way. So this is how it has changed the number since 2016. They had 22 restaurants. At the end of 2022, they had 237, and in the first quarter of 23, they had 263. It's a big annual growth rate. The average unit volume per region is pretty interesting as well, because this kind of gives us a point of where should we grow, like what part of the country should we grow. Northeast is that has the biggest average, but at the same time, they are the place where CAVA has the oldest store. So, I mean, they've been there for around 5 years with most of their stores. And here it comes something interesting. The West is the place where they have the newer stores, on average just 2 years, but is the second in sales per store, which is very interesting because if they keep growing here, I mean, they are going to keep growing this number, bringing the more profitable stores, which obviously is the purpose. Here's the income statement. So something to point out here is CAVA bought a company called Soy's Kitchen. So as we see in 2021, CAVA had sales of 278 million, and Soy's Kitchen had 215 million. But in 2022, they converted many of the restaurants already to CAVAs. So that's why the big difference. So the purpose of doing this was just to convert all the Soy's Kitchen restaurants to CAVAs, obviously increasing the speed to open restaurants because those restaurants were all set up to operate. And they got this buy for a fairly good price. So it was good for both companies because Soy wasn't doing very well. And here comes the...
Wait, Alejandro, before we go to this comparison, I also want to just quickly note about how it looks like they had losses of 37 million in 2021 and 59 million in 2022. Do you have any observations about that?
So as we know, I mean, they're growing. So obviously their profit margin per store is around 20%, but as we can see, there is general administrative expenses and depreciation and restructuring costs. For example, changing the stores to from Soy's to CAVA, pre-opening costs. I mean, that's another cost. So that puts into consideration many costs of stores that haven't really become to full potential because they just opened. So since they just started, they cannot make it profitable yet because a lot of the stores are just not in full potential, to put it that way. So I believe that is the big reason, but with time, these numbers are gonna, the sales are gonna grow and these numbers are gonna kind of stay the same. Obviously, they're gonna grow a little, like for example, general and administrative expenses, but it's gonna become a less percentage of their sales. So they are planning to become profitable pretty soon. Actually, in the first quarter of 2023, they got close to break even just for that quarter. So yeah.
Oh, that's great. Okay, thank you for that.
Okay, so now we're gonna talk a little about the big guy in this field. So Chipotle, as I would say, all of us know, is a Mexican. So they do bring the concept of health. So they have grown very, very much. I mean, they already have 3,200 stores compared to CAVA, just 263. And Chipotle is expecting to have around 7,000. So if they become to their full potential, I mean, they are still halfway. CAVA, on the other side, in their annual report, they said they are expecting by 2032 to have around 1,000 stores. Now, the cost per restaurant is super interesting because it's really, really close in the build-up cost. So for Chipotle is 1.2 million, and for CAVA is 1.3 million. Sales per store is 2.8 for Chipotle and 2.4 for CAVA. But again, not everybody knows CAVA. So I think this number is going to come up way faster than Chipotle's because the more well-known brands, I mean, the more trust they build and the bigger their numbers. Obviously, it's very important to not cannibalize their stores and just open many just very close, but not very far either, because obviously being close certain way brings scale and just manageable things. Like, for example, I used to work in a restaurant, and sometimes if a manager was missing at one of the stores, they would just send another manager. So if the stores are very far away, I mean, it's not that easy to send a manager 1 hour away. So that part helps, obviously, the operation, and it's a daily thing in the restaurant business. Food cost is very close as well. Standard for restaurants is around 30% for food cost. They both are a little above because they are healthy, and their food is very perishable. So I think the food cost is good. Labor, a little more expensive for CAVA. Again, when they grow their per store sales, this number will come down. And occupancy cost, 3% to me is a lot, but obviously as the owner of the place is going to trust more when Chipotle gets there instead of when CAVA gets there, because it's new. I mean, it's more stable company.
And wait, what does occupancy mean? So does that mean?
So the rent.
Oh, that's the rent. Okay, it's not
yeah.
how many people are in the restaurant at a time. Okay, all right.
I should have put rent. Return on invested capital per store is 35% for CAVA and 40% for Chipotle, and that varies for those little numbers, which again, with time, I'm sure CAVA will be able to get to these numbers. What will Buffett like and not like? He will like that CAVA is the leader in his category. I mean, he always likes to, he does like companies that are the leader. For example, NetJet, I mean, is a good example. You know, the airplane rents, basically. He will not like that is an IPO. I mean, Buffett always says that they hardly ever had bought an IPO. I think with, what was this company? The Microsoft, no, the Activision was one of the, yeah, I think no, it wasn't Activision, it was the cloud company, I'm sorry.
Oh, Snowflake?
Yeah, Snowflake, yeah. I think they bought into that. I'm not sure if it was him or it was one of the others, but he usually never buys in IPOs because he knows that the IPOs are commanded by salespeople, and the salespeople want to make the more money for themselves. So they talk good about a company, and they just point out all the great stuff, which is good to have the great stuff, but they forget to mention sometimes the bad stuff and the uncertainties. He will probably not like the current valuation because CAVA is almost $5 billion and their sales are 550 million. And I mean, as we saw, they're still losing money, so he will not like that valuation. He will probably look into, read their annual reports like he loves to do, but he will not like that valuation at the moment. And he will probably not like that it's not that easy to see the future. Obviously, as we project and they project, they are planning to have 1,000 restaurants for 2032, but it's not that easy. Buffett always says it's not that easy to have a great company. I think a lot of things are really going their way, being the leader in their category, Mediterranean, health, the world is becoming more health conscious, good price point. But again, it's not that easy. And the lessons for me, there's always opportunity. We just need to find it. I say this because these three friends that opened this wonderful concept had a lot of competition. Restaurant is a very competitive market, but they just got a good idea and just try to explore it. And I mean, obviously they done very well. So we as investors or entrepreneurs need to have in our mind that there is always an opportunity. We just need to look and think hard. Something we usually don't do that much. They're going in the direction that the world is going. Again, like I said, healthy, a good price point. Always keep in mind that the price you pay for business. And this is the last point, because even though I like probably 98% of the stuff about CAVA, I just think that this valuation is very, very expensive. The market is valuing this type of companies very high. I mean, Chipotle is valued at 59 P. You were telling me, right, Michelle?
Yeah, I think it's like 58p, and the current market cap's like 59 billion for Chipotle.
Yeah, so I mean that's so with that, open to you, Michelle.
Yeah. Thank you so much, Alejandro, for walking us through your presentation of CAVA. It was really great to learn, and thank you for making those comparisons with Chipotle. And considering Chipotle has been around for a while, it's amazing how so far CAVA's metrics seem to be comparable. Like you would think that they should not be kind of competitive yet, but considering how much longer Chipotle's been established and they have, like 10 times as many stores, or, a much bigger multiple of stores, it's interesting that they are still, even at a small scale, CAVA is not so far behind from Chipotle, right?
Yeah, and per unit sales now, definitely not.
Yeah, and one article was suggesting as CAVA grows that maybe they'll be able to bring the same store sales up to like $3 million a year instead of only 2.4 what's it's currently projected for the second year. So there could be upside there also, perhaps if more people get to know CAVA and it becomes more part of everybody's consciousness. Because like I said, like when I first discovered it, I thought it was so cool and great in Washington, D.C. And I thought it was only from there. Like when had some business trips and I went there a few times and I thought, oh, this was great. But I was like, oh, I wish that was here in New Jersey. And then it came to New Jersey a few years ago, and I was so impressed that they're coming to where I live. So I thought it's interesting that they seem to be growing pretty quickly. And like you said, the valuation is a little steep because even Chipotle is only kind of 12 times bigger in the market cap. So it's considering, I mean, Chipotle got bid up very high too. So it's kind of like compared to that, the valuation is pretty high for CAVA. And I also learned about something called the lockup period, where, or at least sometimes between 90 days or 180 days, the insiders and the institutional investors who bought CAVA at say $22 a share, or at lower valuations, they can't sell their shares for up to those periods. So I think when I looked up CAVA on NASDAQ.com, it said their lockup period is until mid-December this year. So maybe the valuation for CAVA will kind of remain a little elevated, a little high for now. But who knows if maybe by December, the people who got in early, maybe they'll get out a little bit, and then we'll see the stock price kind of like level a little bit after the enthusiasm has passed. There's always, some volatility, right? With kind of a lot of IPO stocks.
Yeah, absolutely. As you said, I mean, I think that the valuation is very steep. I mean, Chipotle has sales of almost 10 billion by now, and they are valued at 60 billion.
Mm-hmm.
In the other side, CAVA is almost valued at 10 times sales. So not even Chipotle is valued at 10 times sales. And obviously, like you said, it's probably the expectation, the hot new thing, the lack of many IPOs. You know, I mean, stockbrokers need to go tell something new to their customers, and CAVA comes to mind. I do still think, obviously, Chipotle is a great company. They have a good runway. They are supported by Bill Ackman. I mean, that is huge. But I mean, I still will not go into at these prices personally. Again, not advice or anything, but this is just me.
Yeah, and of course, all of this is just for education. Like we're not saying people should buy or not buy Cava or Chipotle. It's just for learning purposes, of course. And it's definitely interesting to try to figure out what makes sense. And yeah, like you said, there's not many IPOs, and this seems to be one of the few IPOs that are actually kind of exciting. Like that, it's a restaurant model that seems to have everything going for it. Like there's a lot of popularity with Mediterranean cuisine, like from Greece and Turkey and that region. And a lot of times, like at least in the Northeast, a lot of these establishments, like Greek food, is usually just mom and pop businesses. They're usually small scale, but there hasn't been anything that was like, Mexican chains like Chipotle and Moe's and Cadoba. A lot of those are much more established, and there's a lot of them already in the Mexican fast casual space. But before Cava, I'd never seen anything that was doing it in Mediterranean. So I thought that was really impressive that they are, like you're saying, like the first mover advantage. And I don't know why Zoe's Kitchens was struggling. I also read about that, and some people are saying that it was brilliant that Cava bought Zoe's Kitchens in 2018 for I think $300 million, and maybe that will prove to be a great move. Like I think it was like 150 locations, or there was like a good amount of the locations, so that's why maybe they're able to come to market faster than just starting from scratch. In the conversion from a Zoe's, I think is only like 700 or $800,000 compared to if a Cava restaurant starts from scratch, it's like 1.3 million, right? So in a way, they're kind of expediting getting more locations up sooner, right?
Yeah, absolutely. As you say, I mean, they are just saving the time of going to every landlord and just negotiating each restaurant. I mean, they just bought the whole thing and just transform it. And I mean, many of the adequations that the restaurant needs is already there. So I think it was a good move, and especially taking advantage of they didn't pay that high of a price. So I think is something very good to, and they might find other type of restaurants. And as you mentioned, yeah, I mean, it is a big market, the Mediterranean. 40 billion is a lot, but as you mentioned, it's only, I mean, they just above 1% because 40 billion and they are just selling 500 million. So it's just above 1%. So they have 39 and 500 million to go. I mean,
Yeah.
obviously.
Yeah,
So
there's way more room to grow. And I didn't look up how big the Mexican food category is. I mean, it's probably hundreds of billions of dollars, right? And Chipotle is only some fraction of that also.
yeah, you caught me there, but I would say it's pretty. I would say it's around 100 million, 100 billion, if you
Yeah,
ask me.
okay.
And Chipotle is, but Chipotle is around 10 billion. So I mean, there will be 10% of the market, but I will have to verify that
Yeah,
information.
yeah. No problem. Well, yeah, it'd be interesting to figure out, how much Chipotle has already taken of the Mexican category, because, it gives some kind of comparison. If Cava is maybe like around 1% of the available market, they still have way more in theory to grow, assuming more people throughout the country like Mediterranean food. And I think a lot of people like Mediterranean food, like, if you have a pita bread and hummus and like, kebabs or gyro, like a lot of people like stuff like that. I mean, at least it's very popular in the New York City area. So if it's popular here, I would think more people, like you were saying, the West is also growing in the average unit volume. So that's also very encouraging, because Cava started in the mid-Atlantic, like Maryland is where they were originally from. So they're even smaller there than compared to the Northeast, where they've been more expanding into. So it's interesting that even where they were from, it's not as big as some of the other places in the West and Northeast. So I thought that was interesting, and I think like it shows that the Mediterranean category is not yet fully saturated, right? Like you would think there's way more room to grow with the fact that people want to eat healthier, like they want to feel good, and the kind of model that's become very popular in recent years is this like bowl concept with like the salad and the grains. And I think a lot of people like that combination of they can feel more healthy, by adding in more greens to their bowl, and they put like a lot of food options.
I totally agree. I think, yeah, it is definitely a good business to keep in mind. Just have very present the unit economics, and I think is going to be good, but obviously at the right price.
Yeah, for sure. And hopefully, yeah, it'll be good to have this kind of stock on our watch list and just kind of keep tabs on how they perform, because, I feel like you have to kind of watch some of these stocks. Like um, even though I think in the Buffett style, normally I think Buffett would prefer, or Phil Town would prefer, that there's at least 10 years of financial performance available, like public as a public company, but we don't have that yet with this young restaurant business. So it's sort of hard to say, should we wait to invest in this 10 years from now when it's more established? But it's kind of hard to say. Sometimes an IPO is the lowest it will ever be, right? Like some companies never look back from the IPO price; they just skyrocket, like Google. But I mean, it's a tough call. Like we wouldn't say like, oh yeah, buy it now because it will go up, because everybody should do their own research, and it can be a tough call. It could be, a home run. Sometimes these businesses hit it out of the park, like Chipotle did, but other times, like you said, the restaurant business, there can be a lot of struggles in it too, right?
Yeah, absolutely. And even I was trying to put in my mind that when they get to, for example, 1,000 restaurants, they will be selling, if everything works out, let's say 3.2 million per unit. That's 3.2 billion total. And let's say they can turn into a net income of 500 million with that, which I mean, I think it'd be good. Still, if that is the case, I mean, it's 10 years to go, and that will be a 10 PE, which I mean, obviously is good, but we have a lot of to go to get there. And like Buffett said, it's not that easy.
Yeah, for
So
sure. And also, I mean, while it's encouraging that in the demographics I read in the prospectus, I'm sure you saw it too, it said that it's very popular among millennials, like that's the main cohort that likes to eat there. And their main customer base are people who earn in their household at least $150,000 per year or more. So their clientele right now is very more wealthy kinds, like millennials. And even though that's good, but I think in order for them to also grow, they need to also make it appealing to people who don't earn as much, like in the lower income categories. And they might be a little pricey for everyday people.
that is a great point that you point there.
Yeah. I mean, some people spend that money anyway at Chipotle. I probably would be curious to look into Chipotle's demographics and see, what kinds of, ages and income levels tend to spend there, because Chipotle still seems to have a mass appeal that no matter what people's income, they still like to eat there. But CAVA, I think they also need to keep that in mind, like as much as they can be very attractive, but their bowls can easily cost $15 to $17. And that's just, maybe if you have it for lunch. And is that an acceptable price to pay? People have to make that decision of, is that worth it? But, probably if you get a lot in your bowl, maybe you can eat it for 2 meals, and then it might be more cost effective that way, right?
Yep,
Yeah.
absolutely.
Well, this has been really great, Alejandro. I think it's awesome to talk about this with you, and I'm so grateful that you walked us through some of this early highlights of Cava and Chipotle. So thank you so much, and I hope you have a great rest of your week.
Yeah, thanks to you as well. It was great. I enjoyed it.
Thank you very much, Alejandro. Till next time.